Welcome, Houston, once again to On the Money with Ryan Wheelis. Also joining us in the studio today is Peter Lott. I'm your host, Spike Spangle. This is the team from Allied Wealth. We are so excited to be talking about today's program. I know there's a lot of fear and worry that's going on out there, but first, Ryan, how are you doing this week, buddy?
I'm doing well. So great to be here with you, Spike.
Thank you so much. Peter, how are you doing?
I'm awesome, man.
Executive Director of Financial Planning.
I'm in some air conditioning. I'm not sweating right now, so that's good.
Well, the reason we are kind of excited about talking about today's program is I know that your phone has been ringing from our radio show, from your TV shows. People are really worried about the markets right now, and we are going to dedicate today's entire program to talking about the market, what to do about it, and exactly what you want to do for Houston and how you're going to offer them to take a look at their portfolios themselves.
For sure, Spike. The thing is that, you know, the market's down nearly 20, the drawdown of the market this year was down 23% thus far. That's the lowest point we've experienced. And what's happening is people are starting to experience those losses in their portfolios. Mm-hmm. And now they're opening up their statements and they're going, oh my gosh, I had no idea that my portfolio could lose this much in a down market. And they're getting really concerned. They're calling into the show. They're looking for help. We've got a great offer today. We're going to offer the folks of Houston so they can take advantage and figure out what their portfolio will do in the next major market crash, what may happen for the rest of the year, and until we get out of this bear market we're currently in.
Right, right. So to be clear to everybody out there, of course, Allied Wealth, financial advisory firm right here in Houston, offices all around. And the reason we're talking about this is because what Ryan and the team want to do for you, Houston, is do the portfolio X-ray challenge. Now, we're going to explain what that means exactly throughout today's program, but I think we need to start with a baseline of what exactly is happening in the markets. Can you give us a little bit of the hows and the whys of what's going on?
Well, largely what's happening is we're experiencing inflation at 40-year highs. And a lot of people don't understand what that's about, right? And the sad thing is it's more about supply chain logistic issues than anything else. And so the supply chain logistic issues, in addition to all the capital that came into the financial system via the COVID stimuluses, have all these dollars chasing all these products and services that are out there, and there's not enough supply to keep things online. So what's happening is prices are rising. Well, further, the Federal Reserve Bank is now fighting what I believe are supply chain issues by raising rates. And sadly, nobody's talking about fixing the supply chain the way they should. And I don't know if that's a political situation or what, and who knows. So we've got a big kind of a quandary. It's uncharted waters. We've not been here before, and I don't know how it ends, folks, but I do know this. I know with a properly positioned portfolio, one that helps mitigate downside risk in the markets and maximize returns when the market go up, they can really help you weather these types of storms we're going through right now.
Peter, I know on Monday mornings you take the phone calls that come in from the radio show, from the TV show, everything that we do together. What is the sentiment out there? Are people, especially not from folks who are your clients?
And the question is, how did I get here? Mm-hmm. How am I down 20, 25% of my portfolio? My current advisor is telling me that, you know, there's not much he can do. We're kind of stuck right here. And we need to ride it out, and they're thinking, I'm in the retirement red zone. I'm very close to retiring, 2 to 3 years from retirement, maybe just into retiring, and now I may have to take a reduction in my income in retirement. Yeah. So people are calling in, and they're very upset. They're wondering what's going on. They're wondering why their current advisor's not taking control of it, and we're having to help walk them through, but most important, educating them on first why. Yeah. And two, what we do to correct that.
And sadly, you know, 90% of the prospective clients that call into the show, they have no idea they were taking this much risk to begin with. And they didn't know their portfolio could lose 25%.
How is that? I remember starting lots of different jobs. That's in this industry. In this industry, that's what happens. Lots of different jobs. And you're picking the 401ks and a percentage here and there. And for folks who are wanting to start their job and get moving out there, they might not realize how much risk has accumulated over years, if not decades, in their accounts. Talking about the Portfolio X-Ray Challenge, how can you help people inside their work accounts? Are you able to take a look at that for them?
No question about it. So what we can do is, if we can get a list of the mutual fund options you have available to you in your 401k, we can take a look at those and say, all right, based on what you have, what allocation of capital across these various funds gives us the highest potential rate of return with the lowest amount of risk? And we can absolutely do that.
Say that again?
The highest potential rate of return with the lowest amount of risk, folks, because if you can mitigate the downside risk, you don't need great returns to get back to getting even from losses, right? Because you mitigated the downside risk in the first place. And I know this, you do not need great returns in your golden years to live the lifestyle you want, but you absolutely have to avoid great losses. It is that simple. And so there are ways to help mitigate that downside risk in your current portfolio, and as part of the Portfolio X-Ray, we're glad to do that for the folks of Houston.
Right. Now, we talked about this earlier on our radio program. We actually shot earlier today, a lot of fun, but we were talking about sequence of returns. And this is happening right now. We see the markets down, but I think we also need to take a little bit of a look historically of how did we get here? Is what's happening right now the same as what happened 2 or 3 years ago?
It's completely different.
It is way different. You know, with the pandemic, the market lost, what, 35% that year, 34, 35%, but the bond market still upheld. We had 2008 financial crisis, the bond market upheld. We're at a paradigm shift where equities are down, bonds are down, so a lot of people just seen their statements at the mailbox and they're about to have a heart attack, wondering what they're going to do. So it's a completely different market scenario than we've seen in the last 15
and pretty
years.
soon they're going to get a second quarter of statements seeing that their accounts have gone down. And one of the things you were talking about earlier this morning, saying on the radio show, you can't just get the market back and your accounts will be whole again. It's almost like the markets have to go up 100% to be able to recover.
Well, we're talking about losses, right? And so this goes back to my analogy that you don't need great returns, but you need to avoid great losses. If you have a 50% loss in your portfolio and you're pulling income out of the portfolio, say 4 or 5% per year, you're compounding those losses. All right. So what happens to get back to even is if you're down 50%, it takes a 100% return to get back to even. But on the way back up from the down, if you're still pulling money out for retirement income purposes, you're reducing your portfolio's ability to recover from itself. And so one of the things that we do at Allied Wealth is we understand that it doesn't take great returns, but you've got to avoid great losses. And we have just designed our tactical portfolios to do just that. Our system is designed to capture no more than 30 to 40% of the market downside in exchange for getting no more than 70 to 80% of the upside. So yeah, you're giving up some of the upside, but more importantly, you're mitigating that downside risk. And what that allows us to do is achieve more steady, consistent returns over time and kind of takes away that thing we call sequence of returns risk. For example, if you retired back in 2000, 2001, and 2002, it's one of the few times in history that the stock market was negative 3 years in a row. Well, if you were pulling money out of your portfolio over those 3 years, you were subjecting yourself to sequence of returns risk. Well, what if there was a better way? What if I could show you how to have a portfolio that moved money away from those overvalued asset classes early on and moved money towards undervalued asset classes and didn't take those big losses in 2000, 2001, and 2002? In that situation, your portfolio would have produced a steady stream of income and you wouldn't have to worry about making those massive returns to get back to even. But so many folks don't know about how we do things, Spike, because it's not well known in the industry. We're a quantitative investment firm. We take a mathematical approach and we're uniquely different, and we invite you to experience the difference at Allied Wealth.
Okay, for those out there who are not aware of quantitative and being able to take a look at all of this, the sequence of returns and all of that, explain to them what the Portfolio X-Ray Challenge is for them.
Well, it's really simple. Folks, if you're opening your statements right now and you're seeing you're down 25%, to me and Peter, you should have known your portfolio could have gone down that much before you invested $1 in that portfolio. It's that simple. So with the Portfolio X-Ray Challenge, what we're doing is for the folks in the audience who have $250,000 or more to invest, we want you to come in the office, bring your statements, all right? And what I want to do is look at your current allocation, run it through our software program, and figure out how your portfolio would have behaved during the COVID crash, how your portfolio would have behaved during 08, 09, 2000, 2001, 2002, and the next potential market crash as well, because you're going to see more of this in your golden years. And if we can look at those things, you know ahead of time what your portfolio will look like in the next market crash. And then we want to test it against your income needs, your retirement goals, what your legacy plans are, and there's a lot that we do there with that portfolio X-ray.
Right. Ryan, Peter, we're going to have to take a very quick break. Folks, please take advantage of this complimentary offer. Get your portfolio X-ray done. It is complimentary. All you got to do is call the phone number you see right here on the screen. We are going to continue to talk about what's going on in the markets and what you can do, retirement solutions for you, Houston. But first, call the phone number right here, 844-944-7555. More On the Money with Ryan Wheelis and Peter Lott when we get back right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go? And who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Welcome back to On the Money with Ryan Wheelis. Also joining us today is Peter Lott, the Executive Director of Financial Advisory. Okay, all right. But of course,
Spike, you give Peter more promotions than I
I
do.
love Spike. I've been like 3 things today. That's
Ryan Wheelis, the founder of Allied Wealth. And we are talking about what's going on in the markets. It is a little hard to laugh about it because we realize that you are seeing real losses. I've never liked that phrase, paper losses, because you're still paying fees to certain advisors out there, even when you're taking losses. I know that makes me uncomfortable when I hear about that. What do you talk about with your clients when it comes to the losses and how you structure the work that you do for them?
Well, the thing about it to me is you're paying this advisor fees to move things around when the markets get choppy. But what we don't realize is the advisors don't really manage money. They either farm it out to someone else or they're paid by their parent company, and you find them in the retail strip centers and banks and that sort of thing to sell products. And that's what they do. They're not really money managers. But in your mind, because they hold themselves out, or you think they are a financial advisor, you think they move stuff around when the market gets choppy. Well, if that's the case, just ask you a question. Why is your portfolio down oftentimes as much or more than the markets? Is the advisor really moving things around? And is your portfolio even designed for that type of moving around in the first place?
Ryan, my clients, when they walk in the door, the people that are calling right now that are down so much, they're asking their advisor, why haven't they done anything? And the question is either they don't have the tools or the knowledge or they can't. And that's what we educate you on, is how we do this, why we do it, how we make it better to give you a better approach. So one, first and foremost, you understand your risk. Most advisors out there never tell their clients that portfolio in 2008 lost 55%. They don't tell them how much it lost in the pandemic. We show that, and I compare what you're doing with what we're doing and see if there's some bad added value. Because if I can't add value to you,
No question.
there's no point moving forward.
So wait a second. You're saying that I'm not at the whim of what the markets are doing. Just because the markets are down 25%, I have an advisor who might be saying, well, that's just what the markets are doing. So, that's the risk that you're in. Are you saying that you were able to hedge those losses, that your clients aren't losing as much as the markets are?
That's exactly what we're saying, Spike. And to that end, our portfolios, folks, it's a good example. If we go back to the COVID crash, the market was down nearly 35% on March 23rd, 2020. Our models were down substantially less than that, about 2/3 less than that. All right, so that's a big difference. Okay, and several of our models finished ahead of the stock market by the end of the year. Now, that's a really good example of a year in our market environment our models are designed to perform in. But folks, there's a double-edged sword. There's a little bit of give and take here because there will be years when the stock market may be up 30%, and we might get 18%, right? So we're going to give up some of that upside potential, but we also have the ability to mitigate that downside risk. And so again, we're designed to capture no more than 70 to 80% of market gains, and should get no more than 30 to 40% of market losses. And that goes back to the philosophy here is that you don't need great returns in retirement to make sure your money lasts your lifetime. But you absolutely have to avoid great losses. And that is the exact philosophy our tactical strategies are based around at Allied Wealth.
Okay, for somebody who's out there watching the program, though, they say, well, that's great, but it's too late for me because I've already got those losses. They're thinking, all right, it's an 11-0 ball game. They're in the 7th inning, right, because they're about to get to retirement. They're thinking, well, great for me to hear that now, but it's too late. Is it too late for people to do things about what's going on in the market right now?
Absolutely not.
No, it is not too late. You need to make those changes sooner rather than later because we don't know if this is the bottom, right? Who knows if they're not going to continue raising interest rates and keep providing the market volatility? It's going to continue to drive the bond market down. We don't know that.
We don't know.
So you need to make those changes now so we can hedge that risk.
And really what you need to ask your current advisor is, hey, advisor, what is your asset recovery plan? How do you plan on helping me recover these losses? Because at Allied Wealth, we believe the best way to start recovering losses is to stop the bleeding now, right? We need to stop the bleeding now. And if we can do that and then get back into the asset classes that will appreciate in value when the market starts going back the other way, then we can capitalize on that. But it's one of those things where it takes a mathematical approach to do that the right way because you have these things called false positives that can kind of lead you to jump back into markets. You got to scale back into things and capitalize on that upside. But the most important thing you can do is make sure your current advisor has an asset recovery plan and make sure they have a plan to recover your losses. Because again, folks, you've got to get those returns back. If you don't get those returns back, you may be facing a situation to where you no longer have the asset base available to you to produce the income you could have.
So in the Portfolio X-Ray Challenge that you're doing for everybody here in Houston, anyone who calls out to the phone number here, 844-944-7555. Ryan, Peter, and the team want to help you with your own Portfolio X-Ray. You're calling it the Portfolio X-Ray Challenge. Why?
Well, folks, we challenge you. I believe very strongly that you should have this information before you ever invested in the current portfolio you're in. And you know who you are right now. You're at home right now. You got that down statement, and you're going, oh, my gosh, what do I do now? So we believe at Allied Wealth, if we put enough good into the world, good comes back to us. And as a result of that philosophy, we've been very, very successful. And we want to help you, too. And we're doing that through the Portfolio X-Ray Challenge. So the challenge is simple. Call the number, 844-944-7555. Again, 844-944-7555. You can also get the Portfolio X-Ray Challenge by clicking the QR code there on your screen. And in that challenge, what we're going to do is take a deep dive into your portfolio, look at your current holdings. What is the risk? How would that portfolio, how would it have behaved in 2000, 2001, 2002, 2008, 2009, 2018, 2019, which I call the hidden crash, by the way, and 2020, and thus far this year. And we're going to test that portfolio to make sure that it meets your needs, because likely it's not right now. And to that end, we'll dive in and look at the fees you're paying, because if you're paying an advisor fees to move things around and you're down as much as the market is, you're not getting return on your investment for the fees you're spending. We want to identify that with you. And the next thing we want to do is test what you're currently doing against our tactical strategies and see if we can put you in a better situation. And if we can work together. And if we can't, you walk out of that Portfolio X-Ray knowing more about your portfolio than you did when you walked through the door, and that's pretty awesome value.
Thank you so much, Ryan. We got to take a very short break. When I get back, I'm going to start with Peter. I want to ask, let's say if somebody's 60, 62, 63, is there anything that they can do with those retirement accounts? Because those are still at work. Folks, please take advantage of the Portfolio X-Ray Challenge by calling the phone number you see right here, 844-944-7555. If you're still working, what can you do with those retirement accounts when we get back right after this?
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to On the Money with Ryan Wheelis and Peter Lott. I'm your host, Spike Spangle, and we are addressing the market volatility that's going on and really recession-proofing your retirement strategy and plan. Peter, I said before the break, I wanted to ask you, so someone who's watching the program, they're 60, they're 62, say, well, I'm working. What can I do? My 401k, I've got $600,000 there. I've seen it take a 20% loss. Is there anything they can do about that work plan?
There is, Spike. So a lot of people don't realize they can do what's called an in-service withdrawal inside their current 401k, where you're still working, you pull that 401k out to a self-directed IRA, and then you get the management of an advisor, our company, whatever the case may be, but you have a lot more options.
Even if I'm working. So then what? Where am I making the contributions to? Because I want to get that match
So that's the thing about it. Your 401k stays intact. You're still making those contributions. If you've got a company match, that's great. You keep adding to that. But we've taken the bulk of your assets and we've moved that to an account that you can now have more control over. Because the problem is with the 401k, you've only got 15, maybe 25 different options that you can choose from. And oftentimes you don't even have anybody helping you. So you're maybe in a target date fund that's getting crushed, or you're in something that's not working out. Well, now you can get outside
You just open up a whole new can of worms. The target date funds inside there. Yeah, that's...
We've only got so much time, right?
Yeah, but that's kind of pushing the easy button, right? And so Ryan, when you're seeing people using their retirement accounts at work, they've used them for 5 years, 10 years, 15 years. Are they using them appropriately for their risk?
That's a good question, and it depends. And a lot of people don't even know how much risk they're taking based on the allocations they've selected in those mutual funds. Because, folks, there's not an advisor that comes around your desk every quarter at work and says, oh, how's your 401k doing this month? There's just not the way it is. That doesn't mean you can't engage help outside of your 401k plan and get somebody like us at Ally Wealth to help guide you going forward. That we will do that for you regardless if you're a client or not, or regardless if you were in a situation to roll your 401k over. We want to help you, all right? We believe in planting seeds for today to have crops for tomorrow, right? It's that simple. But to that end, a lot of people don't know about the in-service withdrawal. And I'm working with a client right now who is 62. He was getting ready to retire, all right? At the beginning of the year, he kind of hauled around a little bit, took his time, drug his feet, and now the market's drugged his portfolio accounts down about 20, or his 401k accounts down about 21%. He's in a situation to where he is feeling like he can't retire. He's lost his financial peace of mind. He's lost his security. And I can't think of anything more bad than that, all right? Now, what he didn't know is at 59.5 years of age, he could have done an in-service withdrawal. And I could have put him in all kinds of things that mitigated downside risk and helped maximize his upside return, but he didn't even have this basic knowledge. And so many of us out there don't have that knowledge. It doesn't mean we're stupid or dumb. It just means that this isn't taught. Nor do we have an advisor, again, coming around.
Right.
Well, it's a tax-free rollover, too. So you don't have to worry about paying the taxes on the account when you do that. It comes out, that value moves over to a self-directed IRA. You don't pay a lick of tax.
So I can move $500,000 from my work account over into an IRA, and I'm not paying any piper?
No tax.
None whatsoever. It's called an in-service withdrawal. It's a qualified rollover. You move the 401k from a 401k plan over to an IRA, folks. It's a non-taxable event. And then what you do is you've got those 25 funds in your 401k. Well, you've now gone to open up the world of investment options that are there for you, because, I mean, there's 12,000 mutual funds in the marketplace. Is there a possibility that those 12,000 mutual funds could be better than the funds inside of your 401k? Are there options in there who could have protected my guy that was 62 trying to retire from this major market loss, and he could have still retired when he wanted to, instead of going, hey, I hope the market comes back. I hope everything's going to be okay. Now, Ryan, I don't know when I can retire.
That's what I was going to ask you about. Are there sectors, not that we can give investment advice to the entire Houston area here, but it depends on your situation. Are there places, though, that you can take, because you said that bonds are down, the stock market is down. Are there areas or sectors where there is some growth?
Spike, there's always an asset class somewhere that's appreciating in value. Money is not destroyed. Investing is a zero-sum game. If you sell your investments for a loss, somebody on the other side of that investment bought those investments at a low point, and eventually they're going to sell them at a high point. It's a zero-sum game. So all money does is move around different asset classes. And this year, the best asset class out there by a mile is commodities, with a subcategory being energy. All right. So there are things that you can do to move those asset classes. But more importantly, your portfolio and your strategies have to have the ability to automatically allocate to those things, because your portfolio has a universe, right? And if your universe in your 401k is only 25 mutual funds, that's all you got. You may not have the ability to have a commodities fund or an energy fund and that sort of thing, right? So again, that in-service withdrawal option can really open up that universe to you and put you in a situation to where you may be doing better, or could be doing better. And folks, we will help you discover that as part of the Portfolio X-Ray Challenge. And to get that so easy, all you got to do is call us 844-944-7555 or click the QR code on the screen.
Peter, I know that, again, you'll talk to a lot of the folks who will call into the program here and what's going on, but for your clients, the people who you have, are they calling and panicking?
Well, Spike, they're watching the news, right? And they're picking up the phone, Pete, the market's down 25%. What's going on? What are we doing? But it looks like we're down just a fraction of that. And I'll tell them the amount. Oh, you guys are doing good. Never mind, I'm sorry I bugged you. I'm going to stay on vacation. But that's the security our clients have, is that they don't see the drawdowns that the market is, or a lot of the other people that are invested out there. They're not seeing anywhere near that, a fraction of that. And sometimes I've got clients that haven't lost any money to this.
Well, and to that end, folks at home, it's super important to be connected to your portfolio, be connected to your financial advisor, and be connected to your plan, your overall written comprehensive financial plan. And that's a super important thing that people sometimes lose sight of. And if you're connected to your plan, you know what's going on, right? You know if you have a bad year that your long-term probability of success may go from 91 to not down to 90%, but 90% is still a good number. So it's super important to maintain that connectivity, and we stay very well connected with our clients at Allied Wealth, and we invite you to experience the same.
Ryan, we did nearly 28 minutes without mentioning that you're a pilot.
Oh my gosh.
We do that. Through these stormy weathers, are you helping people stay above the clouds, get through them? Is this what you're trying to do here at Allied Wealth?
There's no question about it, folks, and that's all part of the Portfolio X-Ray. You can get that by calling 844-944-7555. Take a look at those drawdown numbers and know how your portfolio will behave in the next market crash.
Thank you so much for watching On the Money with Ryan Wheelis and Peter Lott. We're going to be back with more retirement planning information once again next week.